Okay, so in this video I'm gonna explain the petrodollar system, but why? Why make yet another video when there's countless videos and many articles explaining it? Why another one? Well, many explanations are fine, but are like superficial. They explain something along these lines, right? Which is it's true, is accurate, but it doesn't really basically you need to already know the system in order to understand the system. So I want to take a different approach. Instead of going to something like really abstract and superficial, I'm gonna go into a concrete example. So here I have a simulation. This is like a toy model of a world um, economy, which there are some goods and some trades between the different countries, and I'm going to show exactly what happens when you have petrodollar versus when you don't have it. Like in a very real, tangible level, like you as a consumer, like what happens to the prices of the goods in United States. Like this is particular to United States because the petrodollar is regarding US dollars. So let me explain a little bit this model, and then I'm gonna go further into like once you understand this, um, like what actually happens, then I'm gonna explain the history and why this model is important. The system, petrodollar system is important. But let's start with the basics. So in this model, we have a few countries, 6 countries. Each country has their currency. Um, these are roughly like realistic, but it doesn't really matter. It's all just numbers to show what happens. And each country produces one good only. So it's an extreme simplification of an actual world economy, but it shows what happens. So United States produces iPhones. China produces RAM memory. Japan produces cars, a specific kind of car. India produces one specific kind of pharmaceutical, and Russia produces some unit of steel, which costs $700 US dollars. And we also have gold, which is not pegged to any currency, and I just put it as 4,000. So we have multiple rounds, like each round you can consider 1 month. So we can do like the simulation for 10 months and nothing happens. The prices remain stable, right? So that's the purpose of the simulation. Like first, we have a stable economy, nothing changes. All the prices remain stable over time. The currencies remain stable over time. But we can see what happens when things change. For example, here we have trading preferences between like China, like how many iPhones, how many units of RAM, and so on. They buy, like these numbers are arbitrary, just some percentage of some total budget. So we can just like increase a little bit from 23 to 24, let's say. Then run 10 rounds of the simulation, and what happens? Because the iPhone is produced by United States, now the US dollar becomes stronger relative to other currencies. And what does that translate to in terms of the prices of goods in United States? Well, everything becomes cheaper except local goods. Local goods remain the same, but everything else, everything that is foreign becomes cheaper. Not that much, like gold from 4,000 just 3,900. So it's not that much, but this shows what happens when there is a change in demand. Now I can decrease it, and if I decrease it, the opposite happens because now there's less demand for US dollars. Now all the prices go down, and that this should make sense because this is like economics 101. There's a price for a certain consumption and demand, sorry, demand and production. There's a certain price. So if the demand increases, let's say that the demand of avocados increase, so naturally the price of avocados will increase. But this also affects currencies. Like for example, if Germany suddenly decides to buy more avocados, then if Mexico is selling those avocados to Germany, then Germany will need Mexican pesos to pay for those avocados, which will increase the demand for Mexican pesos, which will strengthen the Mexican currency. So a currency you can see it as a good. If countries demand that currency more, then that currency becomes stronger. So it's really that simple. Um, but let's say that another example. Let's say that Russia suddenly wants to buy more Chinese cars, sorry, Japanese cars. What happens then? Well, in this case, the Japan currency becomes stronger, so then cars in United States become more expensive. Now, interestingly, other things become cheaper, like even steel from Russia becomes cheaper. So that's what happens in a world economy where everything is interrelated, like one country buying more stuff from another country, like Russia buying stuff from Japan. That actually affects prices in the United States because everything is connected, basically. But so far, what does this have to do with the petrodollar? Like this is just trades between different countries. But we can see how the trade between different countries affects the demand for the currency of that particular country, and that affects prices in the United States. But now what happens like with the petrodollar? Like that's the question we want to explore. Like here, Russia is selling their oil in US dollars. But what happens if they don't? So I can turn that off and let's see what happens. If Russia decides to not sell their oil in US dollars, then everything in United States becomes more expensive. Everything um, not local, everything foreign. Why? Because there's less demand for US dollars, so the US dollar becomes cheaper relatively to other currencies, so other currencies become stronger, so goods from other countries become more expensive. So that's it. That's basically what happens with the petrodollar. It strengthens U.S. dollars, and that makes goods in United States cheaper that they will be otherwise. But in this model, Russia doesn't really export that much oil. Saudi Arabia is the one that does. So here we see that the price of gold increased from to 4,000 to 4,500, and this is like well, the gold standard, like, because if anything else changes, like for example, if pharmaceuticals from India become more expensive, was it because the dollar became weaker, or is it because the Indian currency became stronger? You don't know. But gold is different because gold is like a universal good that is not tied to any currency, but it still becomes more expensive if Russia decides to not use the petrodollar, basically. Even gold becomes more expensive. But the key player is Saudi Arabia in this model and kind of in the real world, although to a different extent. But what happens in that case? Now gold becomes way, way more expensive. Everything becomes more expensive in United States except local goods. Local goods remain the same. But actually, I mean, this is of course a simplification because in the real world, the iPhone uses foreign components, so the iPhone actually will also become more expensive. This is a simplification. The point is that that's what the petrodollar does. It, well, I want to say artificially, but it's up to you to decide how to name this fact. But it makes the US dollar stronger. And if the US dollar is stronger, then the price of foreign goods become cheaper. It's that simple. There's no way around it. So that's why to explain this in discussions, I say that the world is actually subsidizing United States lifestyle because if other countries sell their oil in US dollars, that means that people in the United States can buy foreign goods cheaper. So anything that you can think of, like some product from Sweden, from IKEA, it's gonna be cheaper in United States than in Mexico because Mexico doesn't have this privilege of the petrodollar. So the only way Mexico or any other country can buy foreign goods cheaper is by increasing their exports. There's no other way. United States is the exception. All they have to do is convince other countries to sell their oil in US dollars, and that's it. So that's the direct consequence of the petrodollar. That's what happens. So if Americans want to retain their lifestyle as it is right now, they have to keep the petrodollar going. They need other countries to keep selling their oil in US dollars. Otherwise, what's going to happen? Prices of goods will increase. That's it. There's no other option. The petrodollar system makes the US dollar strong. That's it. Um, so that is the main reason of this video. Like when people show a graph of this, like this is true. Like um, OPEC countries, like there says the oil in US dollars that strengthens the US dollars, which means more money to uh, United States. That is related to the central banks because actually it's not just one way. Like Saudi Arabia sells their oil in US dollars. So now they have US dollars. What are they going to do with this excess of US dollars? Well, they buy American goods, American services. They invest in government bonds and so on, which strengthens the US dollar even more. So yes, all these diagrams are correct, but what I wanted to show is the direct consequence in prices of goods within United States. Thanks to the petrodollar, they are cheaper than they otherwise will be. Okay, so now that we have seen that there is something about the petrodollar, let's look at the history of how we came, this came to be, like how we got here, because this was not always the case. So, um, okay, this history was mostly generated by AI. So this is not my opinion, or this is not something like, if it was up to me, I will make this like more shorter and more opinionated. But this is like the overall sentiment of what most people will agree is the factual history. Okay, so uh, before the dollar became oil, so the Bretton Woods and the original dollar order. So this started in 1944. Representatives from 44 allied nations gathered at the Mount Washington Hotel in New Hampshire to design the post-war monetary order. The agreement they reached had a single load-bearing pillar. The US dollar will be the world's reserve currency, convertible to gold at $35 per troy ounce. Every other currency pegged itself to the dollar. The US Federal Reserve stood as the ultimate guarantor, the implicit promise being that any central bank could show up with a pile of dollars and receive gold in return. Right? I didn't write this. This is history. This is the case. This is what happened, and it's very clear from the very beginning what was the whole point of the US dollar becoming the world reserve currency and the responsibility it carried, right? So $35 will equal one troy ounce of gold. This is fixed. 44 nations agreed to this, and this stayed being true for 27 years. So this began in 1944. That's the beginning. So, actually, I don't know how to pronounce this. Triffin, the Triffin dilemma. In 1960, Belgian American economist Robert Triffin identified a structural contradiction at the heart of Bretton Woods. For the world to grow, it needed ever larger reserves of dollars, but for the US to supply those dollars, it had to run persistent trade deficits, exporting more dollars than goods. The longer this went on, the more dollars accumulated abroad relative to US gold reserves. At some point, foreign holders will lose confidence in the $35 peg. The system contained the seeds of its own destruction. Right? You can agree or disagree with this. This is something that was being said. So, 1960, Triffin testifies to Congress, warns of the inevitable dollar crisis. 1965, Francis de Gaulle, very famous French president, calls the dollar's privilege exorbitant and begins redeeming dollars for gold. Right? That's obviously a problem. In 1971, Nixon closes the gold window. No more gold for dollars at any price. So that's the end. So let's look at this quote. The strength of a nation's currency is based on the strength of that nation's economy, and the American economy is by far the strongest in the world. 1971. The end of the dollar gold convertibility. On that Sunday evening, Nixon suspended gold convertibility temporarily. temporarily, quote unquote, as if, well, I'm not gonna insert my own commentary on that. It was permanent. The Bretton Woods system was over. The dollar was now a fiat currency without a commodity anchor, and Washington needed a new reason for the world to hold it. So this, I mean, I don't want to like add too much commentary, but that this breaks the Bretton Woods agreement. The whole point of anchoring the whole world relying on U.S. dollars was that the U.S. dollars were anchored on gold at a fixed rate, and 1971 Nixon breaks this temporarily, and that changes the world forever. So now, oil for dollars, the deal. So Kissinger, Saudi Arabia, and the birth of the petrodollar, 1971. Let's begin there. In October 1973, Arab members of OPEC declared an oil embargo against the United States in retaliation for U.S. support of Israel during the Yom Kippur War. Israel, once again, the oil price quadrupled in weeks, from roughly $3 to $12 per barrel. Line formed Lines formed at gas stations. Western economies went into stagflation. The crisis exposed how structurally dependent the industrialized world had become on Middle Eastern oil. For Washington, it also created an urgent problem. Oil was being priced in dollars, but dollars were no longer backed by anything. What would compel OPEC to keep accepting them, right? So this is clearly a problem, immediately followed by the 1971 decoupling of US dollars to gold. We have 4x oil price increase in weeks, 75% of oil imports from OPEC at the peak. So 1973 was the critical point. The Kissinger-Saudi arrangement. Between 1972 and 1974, U.S. Secretary of State Henry Kissinger orchestrated a series of arrangements with the Saudi government that would redefine the global monetary order. The deal was bilateral and largely secret. Right? This is interesting because it took, what was it, like, is it like 30, 40, 45, around 45 years before people knew about this? Saudi Arabia, the dominant player in OPEC, agreed to two things: price all oil sales in US dollars exclusively and invest a substantial portion of its surplus oil revenues, petrodollars, back into US Treasury bonds. So this is doubly good for United States. In exchange, the United States offered security guarantees for the Saudi regime. Uh, with the benefit of hindsight, we now know how much these security guarantees are actually worth, because thanks to the attacks of United States in Iran, um, all the Gulf region now knows how much security United States can actually bring, but this is a separate question. At that point, United States was much stronger, and the Saudi government had reason to believe that this was a good deal for them, including arms sales, military cooperation, and implicit promise of protection against external and internal threats. But remember, all this was secret. So how the system works? Oil exporters sell oil exclusively in US dollars, receive dollars from every buyer worldwide. Every country needs US dollars to buy oil, structural global demand for dollars. And we saw in my toy model what that means. Di directly or indirectly, however you want to consider it, at the end of the day, this makes the dollar stronger, and that makes foreign goods cheaper. That's it. But then my model actually didn't address this, that there's petrodollar recycling. So this is strengthens even more the effects. Surplus of US dollars reinvested in United States, treasuries, funds, US deficit spending, right? So now United States spend as can print as many US dollars as they want. They can run deficits. They can increase their military, which strengthens the petrodollar even more. So that's why there is some insane debt in United States and insane spending of on military. The self-reinforcing loop. Oil demand creates oil demand. Dollar demand, sorry. Dollar demands funds US spending. US spending sustains the security umbrella that protects the arrangement. Well, security umbrella, that's basically military bases all around the world, all the military might of the United States. Like this is not something that is optional, that you just want to be like the good guy, the police of the world. They need this huge military in order to defend the system, the petrodollar system. Oil replaced gold as the dollar's implicit backing. All right. Yes, let's continue. The system as its apex. The exorbitant privilege in practice, beginning from 1974. So now that the petrodollar is firmly established, what happened? The French finance minister Valéry Giscard d'Estaing, I don't know how that's pronounced, coined the phrase exorbitant privilege in the 1960s to describe what the dollar's reserve status meant for USA. The petrodollar arrangement amplified that privilege dramatically. Because every oil importing nation needed dollars, the US could run chronic current account deficit without the usual consequences. Currency depreciation, rising interest rates, balance of payments crisis, and so on. And we have seen this in many countries around the world, right? That is, it's very tempting, very easy to say, like, let's get out of our current situation by just printing more money. But if you do that, first, the currency will depreciate, which will have the opposite of effect of the petrodollar, which is prices of foreign goods will increase instead of decrease. Rising interest rates, balance of payment crisis, because now it becomes difficult to pay the debt, foreign debt. Foreign nations effectively lent Washington money at low rates simply by holding dollars and treasuries. 1974, US-Saudi Joint Commission on Economic Cooperation established, petrodollar recycling institutionalized. Right, so now this is official. 1980s, Saudi Arabia becomes largest foreign holder of US treasuries. Petrodollar flow stabilizes US bond markets. From 1990, 1991, the Gulf War, US defends Kuwait and Saudi Arabia, reinforcing the security for dollar arrangement. right? So now it's starting to come back, right? The money that uh, United States received from this privilege, it's using to defend Saudi Arabia, which will which keeps the system in place. What happens later? The dollarization pressures and the multipolar moment. The first cracks appear in Iraq 2000. In November 2000, Saddam Hussein made a pointed economic gesture. Iraq began demanding payment for its oil exports in euros, not dollars, under the UN Oil for Food program. It was the first time a major OPEC producer had publicly defected from dollar pricing. Analysts disagreed sharply on the significance. Saddam's action was partly symbolic. Iraq's oil exports were limited by sanctions, but the president was set. If one country could do it, others might follow. The decision was reversed after 2003 US invasion. Whether that was a coincidence, a cause, or a consequence remains a generally contested historical question. But the timing has never stopped being discussed. I mean, remember, this is not something that I wrote. This is something that is generally accepted, but I think it's pretty obvious why United States did this. And Iraq was just one example. We can see the same in Venezuela. We see the same in Libya. Many places that challenged the petrodollar system immediately got invaded or their leaders killed or something, sanctions or whatever. Right. So we are starting seeing this quote unquote security umbrella, uh, which was paid by petrodollars being used to defend the petrodollar. Another challenger, Iran. Since the beginning of 2003, Iran required payment in euros for its oil exports to Asia and Europe, a direct rejection of dollar pricing that predates the more widely discussed cases of Iraq and Russia. Iran went further by opening the Iranian oil berths on the free trade zone of Kish land, explicitly designed to trade oil priced in non-dollar currencies, including euros. Unlike Saddam's gesture in 2000, Iran's defection was never reversed, and it has persisted through decades of sanctions, right? So we're starting to see why United States has a problem with Iran. Another challenger, China and the petro yuan. In March 2018, China opened a yuan-denominated oil futures market, the most structurally significant challenge to the dollar oil pricing since the system was established in 1974. Unlike Iran's move, which was driven by sanctions exclusion, China's was deliberate long-term a deliberate long-term strategy. A liquid yuan futures market means oil exporters can hedge in yuan without touching dollars, lowering the transaction cost of defection from the petrodollar system. Uptick has been gradual but real. Russia, cut off from dollar systems after 2022, has become a significant user, settling a, a growing share of energy trade in yuan. Right? So not everybody is happy with the system. De-dollarization pressures. The 2008 financial crisis originated in dollar-denominated U.S. financial instruments and spread globally, a reminder that the world's dependence on the dollar was also exposure to US's systemic risk. Calls for alternative grew louder. China and Russia called for a new international reserve currency. China begins yuan-denominated trade deals. 2009. 2022, Russian sanctions. U.S. freezes 300 billion in Russian central bank reserves, accelerating global unease about dollar dependency. 2023, Saudi Arabia signals willingness to accept yuan for Chinese oil sales. BRICS discuss trade settlement alternatives. 2024, dollar share of global reserves falls below 57%, lowest since 1990s, through alternatives remain fragmented, right? So this is the history. This is what happened. This is how we got here, right? So now we are in a system where United States, the lifestyle of people in the United States depends on the petrodollar, depends on many countries around the world selling their oil in US dollars. That keeps the USD strong, which keeps prices within the United States low. They need this, and they use this power that they have in order to maintain this system. I think people can debate about this, but it's all the evidence shows that anytime anyone tries to challenge this system, United States immediately punishes them. That's the world we are in, right? That's just factual. So let's look at the conclusion. So the Bretton Woods was not just a monetary agreement; it was a peace settlement, an attempt to build a world order stable enough that no country will feel compelled to go to war over economic survival again. 44 nations agreed to anchor that order to the US dollar. That agreement carried an implicit condition. The custodian of the world's reserve currency will exercise that privilege with restraint. The system only made sense if the center could be trusted not to exploit the periphery. The center being United States, the periphery being, for example, Iran. Keynes saw the conflict of interest clearly in 1944 and proposed a neutral supranational currency, the Bancor, precisely to avoid it. The US rejected it. No shit. The world accepted dollar custodianship anyway, on the implicit understanding that the asymmetry will not be abused. So this will make sense maybe in 1944 when USA had acted like a good player in the world, like everybody is saying, okay, in an act of goodwill, we don't want a World War III, so let's do this. Let's trust the United States. And for many years, actually, that trust was um, warranted, at least for 30 years, but not so much after that. What followed is history. The question the world is now asking haltingly without a clear answer is whether a global monetary order can survive when the implicit contract at its foundation has been visibly broken. So let's look at the facts of how this contract was broken. 1971, the US unilaterally suspended gold convertibility, the foundational promise of Bretton Woods, without consulting any other signatory. The rest of the world woke up one Monday to a new monetary reality they had no part in deciding. And remember, Nixon said this was temporary, right? So this is how much the world can actually trust United States. They never went back to the original promise. 1974, Rather than accept a diminished dollar, the US secretly negotiated a replacement system with Saudi Arabia, converting military protection into monetary dominance without multilateral consent or transparency. Remember, this was secret, right? The United Nations was not involved. No other country was involved. It was secret. 1974 to present, the ability to run unlimited deficits financed by the world's forced demand for dollars allowed the US to consume more than it produced indefinitely at everyone else's expense. The structural abuse Keynes had warned about in 1944. Once again, I did not write this, but this is exactly what I was talking about, right? We're subsidizing American lifestyle because no country on earth can do this. Any country on earth that tries to do this, they will suffer immediate consequences. Their currency will be devalued, the prices of goods inside the country will rise, right? They cannot, no one can do this except the United States. Dollar access was 2003. Dollar access was progressively weaponized, first against Iran, then Russia, cutting entire countries off from global trade. No country at Bretton Woods agreed to give the custodian the power to exile nations from the world economy. Right. So this a phrase: with great power comes great responsibility. The world gave United States this great power and they just abused it. That was never the intention. 2022, the US froze 300 billion in US Russian central bank reserves, sovereign assets held in good faith in the dollar system. It was a moment that made the implicit contract impossible to ignore. Dollar holdings were not a store of value, but a political instrument. And everything about after 2022 follows from that. We see countries no longer trust United States. Everyone is trying to avoid U.S. dollars. Um, they had this privilege, they abused it, and there's no going back. Everybody understands that this system is just political. It's not used to um, maintain world peace or anything like that, like it was supposed to be. And the only reason it's maintained is for the benefit of United States citizens, so they can buy cheap goods at the expense of the rest of the world, right? This is like here the prices are stable. Saudi Arabia decides to sell their oil in another currency, prices in the United States go up. It's that simple. And the more countries that decide to do that, the worse United States will be. But of course, the ones that are going to pay that price, which is with which it is coming. It's not a matter of if, it's a matter of when, because every country around the world understands this. They gave United States the responsibility and the power, and they ignored the responsibility and abused the power. And it's only a matter of time before the rest of the country decide like enough is enough. Like no country in the world has this um, privilege. United States should not have that privilege either. It's that simple. That's the petrodollar. All right. Uh, leave a like if you find this useful. Cheers.